All right.
Or we're live.
I think we are. I'm just gonna assume we are this time. I think last week we had this whole like, is YouTube really live? Because right now I'm looking at our live stream and it's not showing it. I'm guessing we're just in queue and streaming and buffering and whatnot. But hey, here we go. We are live. Brad, welcome back to San Diego.
It's good to be back.
Yeah.
It's nice and cool.
Oh, is it kind of hot over there? How's it over there in Florida?
It's actually been great weather, but every now and then you get that hot,
muggy
sticky,
day.
muggy,
Swamp.
Yeah, but it's good to be in South Florida, seeing friends and family. Some people I haven't seen in a while. So.
Well, cool. All right. Well, we are here at another Friday live Q&A with the Edge team. Myself, Paul Pui, CEO and co-founder, joined by
Brett Musser. I do business development, content, talk a little bit, write a little bit.
A lot of our content. So if you read almost any part of our blog, you're probably reading stuff that's written here by Brett. So what are we going to talk about today? We've got a few topics that are kind of hot on the plate of our user base.
So we'll cover some of like our new release. And
we'll cover the new release, which we just put out earlier this week, as well. BSV
hard fork. They have one coming up.
Fork. Yeah. And there's always hard forks going on. That's probably going to be like half of the topics we talk about in this live Q&A, because obviously it's really relevant to our user base. When a hard fork happens, protocol update changes, it could affect our users and what they're able to do, what they're no longer able to do, what new functionality might come to them for those that are holding or transacting any of those currencies.
And I think a lot of the teams and projects have gotten better about communicating them, and people are kind of used to them, where before they were a little more scary.
There were
a lot of teams have gotten, and communities have gotten used to, another hard fork. It's not
the days
a
of
big
Bitcoin
deal.
just never saw one.
No, you didn't.
So it was really scary to think of even a hard fork, but obviously with a lot of different currencies out there, we support a handful, with several being on a regular pulse, especially like when we integrated Monero early on in the life of Edge. Like every 6 months, like clockwork, a hard fork, and some of them were pretty tough for us, but you deal with it and you move on.
And you learn, and you're set up well for the next one, and the community. It's almost like you've never done a workout before. It was really tough the first time, and then your body kind of adjusts and gets used to it.
Got it. Cool. All right, so let's talk about those things, and I think we're also going to talk about EOS. EOS is one that we've brought up in this Q&A a few times because of the kind of volume limits and network capacity issues that have kind of hit the network. So when people are trying to send transactions, they occasionally aren't able to. And actually right now, most people that had activated an EOS wallet from months ago, back before the minimum staking requirements for being able to do a handful of transactions per day, when those requirements were much lower, the accounts that they had created on Edge used and staked a smaller amount of EOS. And now a larger amount of EOS is required and people aren't able to send out their funds. So we'll talk a little bit about that, both what people can do if they have stuck funds in either an Edge EOS wallet or in an EOS wallet in other applications, and also what we're looking at doing going forward to resolve that.
I have a question about that. When did EOS raise those limits?
So EOS itself never raised those limits.
Oh,
so those limits are, they're not hard coded into the application. It's really it's kind of like a mining fee in Bitcoin. It's what miners want to accept. And so with EOS, instead of paying a mining fee, you stake a certain amount of EOS for various resources, such as CPU, which is the processing power or the processing necessity of a transaction, network, which is obviously the bandwidth required for a transaction, and then RAM, which is storage required for a transaction.
So the market rate for being
CPU.
able to operate on the EOS network has gone up.
It's gone up, exactly. And so normally you stake a certain amount, and that gives you a certain amount of CPU usage for free every few days.
Okay.
And then it recharges, and then you use again, and it recharges, and you use again. Now, what happened was a DApp got launched, which effectively created an airdrop, so that when people mined a new token on the EOS network, not an EOS token, but a separate token on the EOS network, they mined it with the CPU of their EOS account, as opposed to physical CPUs or mining it on like the virtual CPUs of their EOS account. And that gave them this token. But of course, that created a huge demand for CPU resources. Right? You stake some and you get free CPU, just keep mining every day, and it recharges after another day. So the requirements shot up. So to give you an idea, it used to cost about 2 to 3, if not even less, EOS to create an account, a wallet in Edge, and that was targeting being able to do a handful of transactions a day, about 5 to 10 send and receives. That is now shot up to requiring about 30 plus EOS. equivalent to almost $100, if not more than $100, to create a small number of transactions per day. Right? And that's simply because other people are creating a ton of transactions and burning through the CPU, and the miners are like saying, "Oh, we need more."
Yep.
Right? And really, nothing in this world is free. EOS promoted itself as being like free transactions, and I think an analogy to this is, you know, the Shapeshift ecosystem that says, well, we give you free transactions. Well, it's not free. You're just shifting the cost between staking and time value of money, where your money's locked up and isn't spendable, to paying it immediately.
Yes, the two costs are inflation or dilution of whatever you're holding, and then, like you said, time value of money, opportunity costs instead of transaction costs.
Exactly. So either pay right away, or you pay some now and you hold it, and then you get more free afterwards. And neither of them are free. They just have, one has the illusion of free because we're used to thinking if we pay it now, then we're incurring that cost now, and that is a non-free cost.
What do you think is a better user experience? Do you like the direction that EOS and other networks have gone with kind of getting rid of transaction fees? Because those can be kind of
it can be
they can add friction.
It adds initial friction, so you can't send any money until you go and stake some funds.
Yeah.
And having to go through the process of initially staking funds creates a friction point that I think alienates a lot of people from creating an EOS account, especially one that's self-custody. So it actually makes it where a lot of people that hold and trade EOS just leave it on exchange because they never have to deal with this. They never have to create their wallet, get their wallet a name, and fund it, and make sure they have enough gas. And so that actually alienates people from self-custody solutions. Right? A lot of people I know that trade or hold or buy and sell EOS don't even have it in their own keys. A lot of the developers do because they're building dApps on it. Now, long term, I think once you can figure out the fine balance of how much you need to stake to create a reasonable amount of transactions, and people are okay with that cost. They say, okay, $30, I stake that, and pretty much for life I can do 10 transactions a day. You get that one friction point up front, but then incredibly low friction afterwards. It is a trade-off. There's no one right answer to this. So I like that they tried something different, but I'm not confident that it's the best way yet, especially when you start to realize how much it really costs.
Yeah, and I don't know if that's a good way, especially for somewhat of a new product that you want to onboard people. You don't want to have a high initial friction. That's the thing I don't like about it. It's definitely more attractive for people that are, I guess, they're already into digital currencies or want to check out a network and are willing to go through the initial upfront friction to bypass the everyday using friction that other cryptocurrencies like Bitcoin have, where you have fluctuating fees all the time. But this looks like they didn't really sidestep some of that fluctuation, because now at first I thought they changed it at the protocol level where you had to have a certain stake to operate, but it seems like this is just part of market forces.
Exactly.
So they tried to sidestep these market forces that are part of like the fee, I guess. The fee market that's a part of other cryptocurrencies, but now there seems to be a staking market now.
Exactly,
So,
and the staking is the fee effectively. It's just it's taken a different time frame than paying a fee immediately. So to kind of get back to the issue at hand and the questions that users are having and how to alleviate it. So right now, if you had created an EOS wallet in Edge and it cost you, say, less than $5 to create the wallet, that gave you at the time 5-10 transactions a day, you'll find that right now you can't even do a single transaction. You haven't staked. There hasn't been enough EOS staked as CPU resources for you to transact and send even one transaction. So one option is to actually take the private key out of Edge and put it into another wallet to just Scatter. Scatter is kind of your power user EOS wallet, which lets you do a lot of things like adjust your staking amounts and even connect to various services to create transactions. And within Scatter, you can use blocks.io to send transactions. So you can use blocks.io to create a transaction, which Scatter then signs to send your money. And using blocks.io, they'll actually pay for a transaction to be able to get your money out of EOS. For a lot of people, they might just want to take their EOS out and convert it into something else, use an exchange and whatnot, and convert it to something. So I'm like, forget EOS. But for those that want to still continue using it, then in interim, until we have some fixes in place in Edge, you can use blocks.io, B-L-O-K-S. Someone correct me, fact check, BLOKS.io. Am I correct?
let's go, producers.
Producers. All right, I'm going to get
We'll get back
the
to
answer
you.
in a second. We'll get back to you guys.
So does that mean they wouldn't be able to release those funds
They'd be able to get the funds out.
Well, without blocks. What's the service called?
Blocks.io, where blocks.io
But they would be able to
actually
pay.
They'll actually stake CPU temporarily for that transaction for you to send money out.
Like the marginal amount.
It's almost like to my understanding, they're actually doing it temporarily for free.
Okay.
Where there's for the goodness of the industry.
Yeah.
And this is an interesting model that EOS has, is that there are times where we're going to get these kind of free services because they come from entities that are also block producers.
So they can share resources when they feel is necessary.
Feel it necessary to keep the network going, because block producers don't just make money for staking, they make money by being voted on. And if they do good things for the community, they get more votes, and by getting more votes, they get more money out of the kind of mining reward.
What I would assume if they didn't do services like this, users would have a bad taste in their mouth.
They'd have a bad taste in their mouth, but also
not necessarily understanding how the staking could change their ability to use resources.
Correct.
You know,
but also it also opens up an opportunity for another block producer to offer those resources and get more of the vote. And by getting more of the vote,
so they compete over goodwill.
Exactly.
Gotcha.
They're mining goodwill. So that is a unique thing that I've always appreciated about EOS, is that they're trying this new type of kind of subjective mining of goodwill.
Gotcha.
Exactly.
Yeah.
And so that's why there are APIs broadly available to allow people to query transactions, indexed transactions on the EOS network, where you don't see that on pretty much any other service where there's more commercial paid for APIs. So instead, we're paying for it through effectively the mining of EOS. So what is coming is we're looking at implementing an API that offers a similar service to Blocks.io, and this is a service by the Graymass team, and it's called Fuel. It's an API allowing us to create a transaction that is going to have the CPU resources staked by a third party. And the Graymass team is what has staked their EOS resources.
Helping our users out.
Helping users, actually not just us, but other users using other wallets to be able to send transactions. Right now it's free. I imagine in the future it might cost some amount. And then you're actually going to get an experience that's not too different from Bitcoin and Ether, where you create a transaction, you specify this is the entity that's going to stake the CPU resources necessary to create the transaction. But as part of the transaction, you're also going to send a little bit of EOS to this third party. In Bitcoin, it's the mining fee. It's whatever you don't send out from your inputs. You know, like you say, I'm going to send 10 Bitcoin from my wallet, and this other entity is going to receive 0.9. Whatever's the remainder goes to the miners. With this new model with EOS, you're going to explicitly say, send a little bit to this address, this EOS address, and that is the entity that is going to stake for you, for your transaction, and then they co-sign it, almost like a multi-sig.
Gotcha.
Where the user signs the transaction, we take the transaction, have to send it to a co-signer, that entity over at Graymass, and then they co-sign it and then send the transaction. So
Gotcha.
this comes with some trade-offs. Unlike Ether and Bitcoin, you can send that transaction to anybody, right? It just broadcasts it out to the network.
So now the cosigner has say over
whether or not you can send the transaction or not. You know, unless you implement multiple of these. And the good thing about what Graymass is doing is, while they're offering this as a centralized service, they're also offering it as an open API and service that anybody can implement. So they're encouraging other services to implement the same API, so that as a wallet or as an exchange, you can actually choose which service you want to have staked for your transaction, and they can even compete on what the fee would be.
Just another example of how a lot of the tools that teams build for their own use, or maybe in their local environments use, there's usually a good reason to release it to the whole ecosystem,
as a
right?
whole,
There's kind of this, and when you own the tokens, you definitely have more of an incentive to do things on behalf of the
network.
I guess the common good, the public market.
Exactly.
You don't have to, but we see these types of behaviors emerge out of almost all these markets. We're like, wow, here's another cool tool built by a team that was solving a unique problem for the network, but actually there was a lot of people that had that need, and they were able to kind of release it for open use.
Yeah, you kind of weigh the two benefits you have. You have the benefit of being the monopoly in the market and creating this tool that a lot of people will use and depend on, or opening that up and allowing other people to take advantage of it, thereby increasing your financial value to the ecosystem as a whole, which, if you're obviously a big bag holder of that network token, helps you as well. So you kind of have to find this and strike this balance between the two. It's a unique thing because we haven't really seen that so much in pre-crypto.
Yeah, and I think it's
the internet. People want the internet to do well, so we create standards, but no one holds like the token of the internet, right? Whereas people do hold the token of these various networks.
Well, I think it's also unique because they've set up these new like you're setting up a whole environment or platform for things to be built, where in a lot of other businesses there isn't that incentive or even possibility to create like common spaces or standards. Like
there isn't,
you know, like if
incentive
say
to
you're
come
in
together
physical
too.
reality, you just
Yeah,
don't.
there's less reason to come together, because now that there's a token, and like, EOS being the example, there's a token that all of the companies that are competing with each other, building tools for EOS, still have that common ground. It's like we all have stock in our company, but we all have stock in the cryptocurrency that all of our companies are built on and are dependent on.
There isn't a common unit that brings us all together. Or they're oftentimes industries or I don't know, competitions
like
can
AI
lack
industry,
that. Yeah.
You know? So yeah, it's true. This is the one thing that definitely kind of binds everything together. So that's like kind of what we wanted to talk about on EOS, and dealing with the transaction limitations, the stuck funds inside various EOS wallets, and how to get around that. How to get around that right now if you're with Edge. Once again, you can export your key, put it in Scatter, use blocks.io, BLOKS.io, and soon we'll have gray mass and fuel integrated. At least that's on our roadmap. We'll let you know once that's in there, so you can transact directly inside of Edge and not have to deal with exporting keys.
Do you want to go into the update of Edge, or we want to talk about the BSV fork?
Let's talk about BSV.
BSV fork,
yeah,
and
we might go
then
on a
circle
bit of a
back
wrap-up.
to Edge.
We can always like hammer through Edge really quickly. It was a small update, but BSV could take a little bit of a discussion.
Yeah.
Quite a bit has gone on in the BSV community, and so highly controversial project.
Yeah.
No question about it.
We'll give a little run through on what it is.
Super quick. Super quick. BSV.
Bitcoin Satoshi Vision.
Bitcoin Satoshi's Vision.
So it was a fork of a fork. Right. Inside the Bitcoin community, there was a lot of tension between different groups about how to scale Bitcoin, and from that you had a fork or a splitting of the network between Bitcoin BTC, ticker symbol, and BCH. BCH went in its own direction, and then within BCH there was a disagreement on a lot of different things, and one of the forks from BCH ended up becoming Bitcoin SV, or Satoshi's Vision.
Right.
And I get a lot of the philosophy around Bitcoin SV is kind of a back to land movement, or back to the original implementation of Bitcoin. And some of the things that were either bringing back some of the things that were either taken out or changed a little bit. They wanted to go in their own complete different direction than BCH, and a lot of their changes have been kind of in line with that Satoshi's Vision, or bringing back the old Bitcoin implementation.
Like first, well, I wouldn't even call it 1.0, because Bitcoin isn't even at 1.0, but 0.001.
Yeah.
Right, like the original code base that got launched. And whether or not that truly was Satoshi's Vision, admittedly, you got to agree that they are bringing things back to like the original version of Bitcoin. Whether it's a good or bad thing,
it's highly subjective.
It's highly subjective whether it's a good or bad thing, but it is admittedly becoming much more akin to what it looked like in the earlier version. Before you know it, they might even remove public addresses, because if people realize public addresses were not part of original Bitcoin, right? They were, the original Bitcoin wallets actually used public keys. Originally public keys, which were not hashed into a public address. And there are still some addresses or Bitcoin wallet accounts that hold money that are not held in a public address or held in a public key.
What about 12 or 24 word seeds?
Really, that is not part of the protocol. It's not part of the protocol.
It's added to.
It's more added in that sense. But in a way, addresses aren't necessarily part of the protocol either. They're using some of the programmability of Bitcoin to enable addresses, whereas you don't have to. We could use public keys today if we wanted to. But let's go over what's changing. So when is the hard fork coming up?
I think February 4th. So we got about a month or so until...
Less than a month of the Bitcoin SV hard fork.
Until some of the older versions of Bitcoin SV are non-compatible with the network. And I think there's a lot of different changes in there, but I think the three that the community are, I guess, most excited about, or I guess bigger ticket items, would be removing the limit for block size.
Unlimited.
Right, and that actually is...
The Bitcoin didn't have a block size limit.
It's very true. And Satoshi, I think Hal Finney, one of the early pioneers of the Bitcoin network, was the one that recommended that Satoshi should put in a block size limit for security purposes. And the limit was chosen at one megabyte, and hasn't changed. Some people like that. Some people don't.
If you want Bitcoin Hal Finney's vision, then you got the 1 megabyte.
Megabyte, yeah.
If you want, I guess the
Satoshi vision, it's
you got the
unlimited. But I was reading in the reference client, or for the new reference client, miners will be able to set up their own default or their own limit on there, but the protocol itself doesn't have a limit on the size of the block.
Correct. And this is something that miners have always done, even with a 1 meg limit. So at the time that we had a 1 meg limit, we weren't really filling 1 meg. We had 10K blocks, and then 50K blocks, and then 100K blocks, because we just didn't have that many transactions. And miners can and did implement soft limits below 1 meg, where if they saw if they were starting to build a transaction, they would limit how big it was. Or not a transaction, a block. They would say, oh, I've hit the 100K limit, and we haven't seen blocks above 100K, and they didn't want to be that one miner that kind of rocked the boat. So they would end up limiting the size of the block before they publish it out to the network. In that same sense, the network itself might reject a block that it deemed as too large.
You have an incentive to kind of judge what the network can take on.
To kind of behave with the rest of the crowd, even though there's no law that says you couldn't go above 100K. You wanted to kind of behave well, because you risk someone not accepting your block. And your block getting orphaned and someone else winning. So there's always this natural block size limit anyway, even without it being hard coded.
It's kind of like unwritten social rules, where you're in a social situation, and the things that people know, but they're not explicit. And you kind of feel out, depending on the room you're in, what you can and cannot do.
Yeah, you don't just kind of walk up into a party and it's staring at every lady's chest area. It's like there's this social interaction that you just kind of accept, and these miners understand that. So so they've just pretty much decided to remove the block size.
And that's kind of in line with what their community is all about. They definitely were on the antagonistic side or not antagonistic, I would say they weren't as accepting of the block size limit as some other factions, and they think that it should be unlimited, and miners should mine as big a blocks as possible, and there should be as much room for as many transactions as the network can handle.
All right, we'll see what the network actually can handle. They remove the limit. I'm not against removing of the limit, but I do think that miners should decide on a reasonable limit, and that end up being their own personal limit based on their own economics, and the network come to an agreement in that sense. But I don't think it should be literally infinite, as in today go and mine 100 gigabyte blocks. I think that's unreasonable. So that's one.
I think the next big change is related to I guess part of their vision in general is being able to publish content and storing it on the blockchain itself. So they want to restore an opcode to its original functionality. That's kind of the language they use. And the opcode is opreturn, which allows you to publish data to the blockchain, or to the Bitcoin blockchain. And I believe it allows you to return some type of data.
Well, the opreturn, it was kind of, there's the original purpose of the opreturn, and then there was the purpose that it had been used for a number of years, and then there's the purpose that BSV is trying to bring it back to, but also still retain its kind of secondary use. So for any of those that are developers out there, you're probably familiar with the return command in a function. You write a function, it processes data, and at some point you return the data, the result. There's a command called return, and you usually say return, and that early exits out of the function, and it could also return a value. Well, in Bitcoin, that's kind of the same purpose of this operation. It's called opreturn. It's an operation called return, which means early exit. Like I don't continue processing the rest of my code, or I'm at the very end and I'm choosing to return a true or false, or an actual value. Now the Bitcoin implementation, BTC, changed the opreturn such that you still ended up continuing down and processing all of the all of the operations afterwards, even though you've already hit a return value. Now, some of those operations could be simply pushing data, push this data, push this data, push this data, and that data is now forever stored on the blockchain. And that's where we have the ability to store data that doesn't really have anything to do with a transaction. It doesn't determine whether a transaction succeeds, whether it fails. It has nothing to do with the transaction, but it's just stored there somewhat arbitrarily. So the modifications that have happened over the years are how much data can you put after the opreturn. And at least in my experience, when I first entered Bitcoin in 2013, 80 bytes was kind of the magical number that was allowed. And there was a lot of debate in the industry saying, oh, that's too much, we're spamming the network, let's shrink it down to 40 bytes, which heavily limited the ability to store good chunks of data. With the changes in BSV, and this may have come even before this change, I believe they've increased what you can do and how much you can store.
Because there's definitely a difference in opinion between some of the people that are developing BTC and BSV on, are we spamming the network with irrelevant data?
Right.
And in the BSV camp, there is no such thing as irrelevant data, and that all transactions, whether or not you think they're financial or not, doesn't
relevant.
really matter. They're relevant.
You pay the fee, you get in.
Exactly.
It's as simple as that. Nothing is a spam transaction. And so they've increased the size of the data that you can put after an op return. But what they've also done is made the op return actually return, meaning that after you see the op return, you stop processing any additional operations afterwards.
So the current BTC op return isn't a return.
It's not really a return.
Yeah, it's not a return function in a pure sense.
In a pure sense, it's not. And so the purpose of whether or not that's useful, I haven't actually looked at what you can do that you couldn't do before by having a return be a real return. But the heart of what my understanding of the value proposition of op return to the different camps is that simply with the BSV camp, they definitely want a larger portion of data to be stored there for the sake of putting data that's immutable.
Yeah.
Right? Just general kind of blockchain, not crypto type of use case.
And I've seen some of, I guess, some of their enthusiasts or developers talk about encrypting some of that content that's going to be on there and limiting access through payments. But I remember we were talking about this yesterday, and you could do that, and people could pay for that access to that content. But from our understanding, once that content is out, someone could take that content and sell it on their own. So you really have you have no way, I guess, through the blockchain.
Having a blockchain
nothing native to the blockchain that'll enforce
Correct.
your stranglehold over that content.
Yeah, once you put content on the blockchain, you can encrypt it, inhibiting access, and you can give someone a private key that can decrypt that data. But if that private key ever leaks out, now that data will forever be consumable by anyone that has access to that.
And then why would anyone go back to that where that content is stored and pay to kind of decrypt it?
Yep.
Again, once it's already out there.
Yeah, and the only thing that has to leak is a single key, not, say you have a movie on there that's 4 gigabytes. It's much harder to go and store and distribute a pirated 4 gig movie from one person to another, to another, to another. But if all you have to do is leak a single key, which can get propagated very fast and quickly, with that 4 gig movie sitting there on the blockchain replicated, now anybody can have access to that fairly easily. So it's a bit of a weird trade-off. I've never felt it was a big advantage to hold content that you want restricted on a blockchain versus content that you want public.
Because part of the reason you would, or one of the advantages of a blockchain is that you wouldn't have to have there wouldn't be any, I guess, large-scale storage costs on your end. But
there's huge storage costs on the node's end.
No, it's true. But you're offloading on someone else. But if you're trying to limit access, you would have to set up a lot of infrastructure around that content to protect it outside of the blockchain itself.
Right.
Which I don't know. It kind of takes away some of the advantages that you might see in it.
There's a huge amount of infrastructure, like you said, that you have to put around data to keep it secure. Normally you have to do it around your own servers, like YouTube puts it around their servers, Google puts it around their servers, Yahoo puts it around their servers, but now you have to put it around all of the different nodes that are operating, which for the most part is impossible because it's anybody. And so it's never been something that I've been a fan of, but I do like just simply increasing the size for the sake of being able to put content that you do think should be public. See, I do want my movie to be out there and be public, and I don't want it to be censored. So for censorship resistance, great. For privacy, I would say not so much.
So that you could see some very small scale use case, or I guess some corner cases in which it could be useful for some content. But I'd say
anything
some
that
of
you want to be uncensorable, like
which is going to be sensitive material usually.
Yeah,
I
generally
would imagine.
sensitive, but not sensitive in the sense that you don't want people to see it. It's sensitive in the sense that you want people to see it, but someone doesn't want it. Right? Somebody doesn't want it to get out there, but you want it to get out there. Then it's great for public networks.
Do we have to give the word of the day?
Hey, that's right. Every Friday we have a little giveaway, $20 worth of Bitcoin. If you can get on your Twitter account, look at any of the tweets by our account, Edge Wallet, that mention the contest of the word of the day, and respond to it, reply to that tweet with a screenshot of your Edge QR code, your Bitcoin QR code, with the word of the day, which is today,
whiskey.
and you got to spell it right, whiskey.
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 So, whiskey is the word of the day. Get on the Twitter, reply to one of the tweets from EdgeWalt mentioning the word of the day contest, include a screenshot of your QR code from Edge, and mention whiskey is the word of the day, and you get $20 worth of Bitcoin.
So
Cool.
yeah, we'll get
Right.
back to the last thing.
back to
It's not the
BSV.
last thing, but I'd say the last thing that is of worth mentioning about the hard fork is that, or somewhat controversial,
Huge.
and I don't necessarily understand exactly why, but they are going to be, the BSV camp is going to be getting rid of pay to script hash.
Yes,
which
POSH, wildly popular feature of Bitcoin.
right, because it used to be just pay to a pub key or a pub key hash.
Pay to pub key, correct. Pay to
Now
pub
it's
hash.
now we have pay to script hash, which allows you to create multi-sig.
Which allows you to create
Or
programs.
a lot of
as whole.
programs.
So let's
this
kinda
makes
rewind a little
Bitcoin
bit.
programmable.
Exactly.
Right.
Pay to script hash makes Bitcoin easily programmable. And the idea is that you normally have an address that can receive money. And every address in Bitcoin, like say the one that starts with a 1, right? That's a non-pay to script hash. But there's a little rule built into that address. And the rule simply says you can spend money from this address if you can provide a signature of the private key that matches the public key of that address. Right, that's a simple rule. You've got to have the private key and you sign a transaction. Well, pay to script hash says you need, in order for you to spend from this address, you have to provide the program, the script
With certain conditions.
that hashes to this address and matches all of the conditions that make the script return true. And that script can have a bunch of kind of if then else sort of.
Yeah.
You know, it's a very simplified programming language, but the script can check one thing, check another thing, check a hash, check a signature, and then if the signature matches, return true. If the hash matches, return true. Check a timestamp, have a time delay. It has all these different conditions that it can do before it says, yes, this user can spend the money from this address. And the most common use for that is multi-sig, where you can have multiple keys necessary before you can spend from an address. So yes, by removing pay to script hash, it removes a lot of the infrastructure, the ability for a lot of infrastructure to implement multi-sig on BSV. And so I think we've heard of some companies removing support for BSV because of this.
Yeah, BitGo put out a blog post about it. I'm sure there's some others that have come out after, but do you know any others besides BitGo?
I've never made others aside of BitGo, but I can imagine that if there are any forks of, for example, Copay. So Copay was a commonly forked wallet. It was based around multi-sig. That was its big advantage. It was forked heavily by Bitcoin.com for their wallet. I'm sure that would basically lose support for BSV.
But BitGo is a big deal because it connects. They service a lot of different entities in the ecosystem, so it definitely would,
especially exchanges,
hamper their exchange's ability to use BSV and support their clients. And is this a way of them getting back at exchanges for not I feel like it's shooting themselves in the foot a little bit.
It's funny, on the BSV website, bitcoinsv.org, I believe, there was a statement as to why they removed P2SH. You got it in front of you. It mentioned something about compromising privacy.
Encouraged wide use of poor privacy practices.
And I've been trying to interpret what exactly this means, and give a little bit of credit to William here on our team. We were talking about this earlier, and the only thing we can come up with is P2SH does enable multisig. It enables other types of rule sets which allow you to more securely store crypto, Bitcoin SV, which also enables more secure storage of crypto for exchanges and custodial entities. And by doing so, is it allowing more people to now hold their money with custodial entities, which obviously heavily compromises privacy? That's a little bit of a far-fetched interpretation, but the closest thing that we can come up with as to why you want to kill P2SH to improve privacy. It's almost like saying oh, we're not going to give you all of these more secure solutions. You just got to hold a single key by yourself. Now, granted, I'll give credit to one thing, is that we can still do multisig with Bitcoin SV with the advent of Schnorr signatures.
But have they implemented Schnorr signatures?
The BCH camp has. Admittedly, I have not.
Yeah.
I should have looked at that up before doing this podcast. But to my knowledge, I don't believe that they have. But I could be completely wrong. Someone feel free to go ahead and chime in and post in the chat if they know that Bitcoin SV has implemented Schnorr signatures. But with Schnorr signatures, you can do very private multi-sig transactions. But you'd only have the rule set of multi-sig, meaning 2 out of 3 signatures, 3 out of 5 signatures. You wouldn't be able to do time locks. You wouldn't be able to do any other type of programmability of Bitcoin in the same way that you can do with pay-to-script hash. So I think it's overall, my opinion. I've always been open to experimenting with new things. We've been supportive of BSV and Edge, but I can't help but think that this is an overall negative.
Yeah.
In my opinion. So you basically unwind support of a lot of great tools that are out there. Now, granted, we don't support P2SH multi-sig inside of Edge, but it's something that we intend to do alongside with Schnorr signatures. So that would be kind of the alternative for multi-sig options in Bitcoin SV.
Yeah, and they also mentioned that it's a divergence from the peer-to-peer workflow.
It is in the sense that if you, specifically with multi-sig, P2SH doesn't necessarily diverge from the peer-to-peer workflow, but with multi-sig, there isn't a way that I sign a transaction and give it to you to co-sign it in a peer-to-peer manner.
There has to be some
Some
middleman.
side channel.
Yeah.
No, I need to email you the transaction. I need to send it over Telegram. I got to send it over some other like copay infrastructure to send it over to you.
Which opens you up to potential snooping attack.
Potential,
Yeah.
But potentially never worse than if I just had a single key. Not necessarily worse in that sense. So sure, yes, you have to go through these side channels, which are not the peer-to-peer network. Admittedly, I would have preferred BSV built in a peer-to-peer communication layer that does use the nodes to communicate between entities. Much like we've been talking a lot about FIO. FIO potentially could be that peer-to-peer communication network for things like multisig. But that's the argument. I'll respectfully disagree there. I don't think it compromises the peer-to-peer nature of crypto. And while it forces people down multisig through Schnorr signatures, it does compromise one thing. There's one thing about P2SH multisig that Schnorr doesn't give you, is that with P2SH multisig, you know who signed. So if we had 5 people and 3 people corroborated to steal funds and you needed 3 out of 5 to sign, you could tell exactly which 3 signed. You could see their signatures and know that it's their keys that signed, whereas in Schnorr that's abstracted away from you. So there is some benefit, and once again, the extra flexibility of P2SH with like time locks and whatnot are hugely beneficial. It's unfortunate here
they want to go back to the original implementation.
The original implementation of Bitcoin did not have P2SH, so I can't argue that.
They're being consistent.
They're being consistent. The story's consistent. They're trying to unwind to the original code base, whether you like it or not. So I'll give them credit for at least being consistent.
Well, February 4th is the hard fork, and we'll be ready for it.
So the effect on our user base, if you've got funds in Edge, no worries. P2SH is not used in Edge for anything Bitcoin SV related. You'll still be able to send and receive just fine. You likely will not be able to send to any wallets that were supporting P2SH. But funds that were in a P2SH address, funds that were in a multi-sig address will continue to function. You just won't be able to create a transaction that sends to a P2SH multi-sig address after the fact. So you can always get your money out of those addresses, but you won't be able to put money into them. So it's at least backwards compatible. At least they did that.
Gotcha.
Cool.
Let's cover the Edge release.
All right. So real quick on the Edge release, a couple of things of note related to BSV. Bitcoin SV as a community decided to not use the Bitcoin Cash Adder address. The Cash Adder address format starts with a Q, long string of letters and numbers, not too different from the Betch32 format of Bitcoin. So they've unwound and wanted to use a standard 1 address, and not to even create a new network byte. So you'll notice many currencies similar to Bitcoin, like Litecoin, starts with an L. Their multi-sig starts with an M. What are other addresses? Dash starts with, I think, an X, just to differentiate them so you don't conflict.
Because people do mess them up.
People do mess them up. Well, with Bitcoin SV, they want to go back to the original 1 address, which does conflict with Bitcoin. So the latest release creates one addresses for Bitcoin SV and lets you send to one addresses for Bitcoin SV. So be forewarned. It would be easy to accidentally send your Bitcoin SV to a Bitcoin wallet. And it would be easy to accidentally send your Bitcoin to a Bitcoin SV wallet due to this change. And it's a little unfortunate, but
It is what it is.
It is what it is. That's what the community wanted as a standard for us to be nicely compatible with the other pieces of infrastructure. We went ahead and made that change. So yes, one address is for BSV. You shouldn't have to do anything else. All of your funds that are in the app continue to be there and available as is. You'll just notice that the QR code and the address down below is in an old-fashioned one address. Starts with a one format. As well, on that note, the Bitcoin Cash address format no longer starts with a Bitcoin Cash : prefix. That's now kind of optional, and so it just shows your Q address. And when you generate a URI, like with the amount and your QR code, that's what will start with a Bitcoin Cash : and then the address. So that change was made as well.
Nice.
Cool. And a small other bug fixes and updates, so definitely check it out. A few minor tweaks to the UI, hopefully stuff that you guys like. But give it a try, download it. Always keep your Edge app up to date if you want to be on the latest and greatest, most secure version of the app. And that is it for the update. Anything else? Where are we going to be?
We will be in Tampa Monday night. Well, actually Tuesday morning. Red Eye.
Tuesday morning for Tuesday night.
For a Tuesday night meetup. Free Tampa at Block Spaces. Gabe Higgins
Thanks
will
a lot
be
for
there.
hosting us.
Yes, thank you. And then after that, we will be in Miami, Florida.
Yep.
For
it's
the
like our
North American
Bitcoin
Bitcoin Conference.
Yep.
Yeah.
Thanks, Mo Levin, for having us and having me as a speaker. So
if you're there, come by. We'll be there, and say hi. If you have any questions, we'll be able to answer them. And if you just want to talk it up, it's all good.
Cool. Hey, it looks like we already have a winner of the Edge Word of the Day to Red Lubuguin, or at Red112527 on Twitter, located in the Philippines. And I have a note here that don't forget to reply with your Edge QR code. So it's the first one that replies with their Edge QR code, because otherwise we don't know where to send the money. So to Red Lubuguin, please reply with your Edge QR code, get a screenshot of it so we know where to send the funds. And thanks for listening in. So tune in next week. Oop, we got a few Scottish or Irish spelling. I'm not sure why we had a few comments on Scottish or Irish spelling. But thanks for tuning in. We'll be live again next week on Friday. Maybe out of
Probably
Miami.
from Miami.
Possibly from Miami. We're going to see if we got the lay of the land. We've got a good space to go live over there, and if we got a good internet connection. But thanks for tuning in. And remember,
Not your keys.
not your coin.
Boom.